Stay right there. My name is Jack Wong and welcome to this edition of Weekly Forex Tactics Review. So let me share my screen. Hang on for a second. Okay, so here, this is the Empower Rangers Forex Weekly Forex Tactics for 2nd June 2014. Finished all the trading days for the May, and now we are proceeding to the summer holiday, which I think in the last few months, when the forex market wasn't very volatile, this, of course, next week we have very nice news. Hopefully we'll make that. But before we start, of course, let me begin with the disclaimer. I'm going to flash you the four-page disclaimer. Starting from now, I'll remain silent. Okay, so here we go. We are giving what we think the forex market is going to do next week. We are not here sharing with you or giving any form of investment advice. So please exercise your care when you deal with real money. And each edition, what we are doing is to review the apples, identify the weakest currency to sell, take a look at what's happening next week, and then look at the futures traders' position. Check out the FX technicals via our currency chart matrix, and then review the existing swing trading ideas and discussing new swing trading ideas. Over the last few months, we have a session called Review and Discuss what we call this channel breakout. Given the fact that the market is really not volatile at all, we decided that we have an executive decision to temporarily suspend that segment. When we feel that the market is ready for trade, we'll bring it back. Okay, so let's keep it short and sweet. FX fundamentals for last week. And for New Zealand, we have the trade balance. We also have the ANZ business confidence. Now, it's not a very heavy reporting week, by the way. As you can see, the NZ actually announced a trade surplus. And this trade surplus, however, decline was below the market expected. Much more than that. Unfortunately, the surplus was only 534 million NZ dollars, suggesting that, well, there is evidence RBNZ in next month, June, may suspend the interest rate hike. And then we have very heavy sell-off of Kiwi this week. The reason was because of a drop in the dairy price. Fonterra, being the largest dairy product manufacturer or exporter for New Zealand, actually announced that its expected selling price for dairy products drop. As a result, being positively correlated between the dairy price and the Kiwi dollars, Kiwi dollars unfortunately suffer a little bit. The dairy price actually has dropped 23% since beginning of this year. So as a result, Kiwi is now expected to drop before the RBNZ and interest rate announcement. And this piece of news essentially says that the ANZ business confidence also dropped a little bit. Okay, if you go back to the reading, this month 55.3. Oh, very huge. So Kiwi might suffer some temporary sell-off until the RBNZ meeting, so keep that in mind. We then move on to Australia. We had the private capital expenditure, which is a quarterly number. So PCE data actually turned out to be negative 4.2, and the market actually expected negative 1.6. So one may think, based on this number, oh boy, the economy is very worse. Then I read somewhere it says that past figures shows a predictable declining sector. They were nevertheless 7% higher than the original forecast. So the market chose to analyze the breakout number, suggesting that overall the mining sector's focus is emphasized. That's coming back, and that is consistent with the theme that, well, RBA has no intention to raise interest rate. Nor is it in the thoughts of the dropping interest rate. So RBA's stand is to keep Aussie dollars in a stable long period of time. So that means we might see Aussie dollars trading in a range for quite a while. Okay, so that's my assessment. By the way, there will be RBA's interest rate announcement going to say. For Japan, we have Wednesday. Kuroda said nothing new. Okay, he didn't even make any comment on the Japanese economy and the monetary policy. So we will say that, okay, this is no news. Then we have got Eurozone speeches 3 times. So let's summarize essentially what happened. For the election itself, no impact on the forex market. I've snapped an article which is pretty much telling us that the EU is talking about a what they call a there is a decomposition. Okay, so the word is decomposition or is collapse. EU. France says, well, they want to leave EU, they want to do their own things, and EU is now on the verge of being broken down. Okay, so that's what's the impact, if you like, on euro dollar. But next week, obviously, you all know that next week Mario Draghi will have the press conference, ECB announcement on the interest rate. So market may not even think about all this EU problem. It's a bit far-fetched. So why not we just look at what will happen? Now the market is thinking, okay, how does it happen? Because what is going to happen next week is ECB will hold a meeting on Thursday, and Draghi may say something interesting during the press conference. So in these 3 speeches, Draghi says that it is still a very big concern for ECB as regards the inflation rate. The ECB got to do something. Now, ECB may do quite a lot of things, but there are what we call the legal parameters. So ECB's any new measures by ECB must not be so outrageous, because that would be subject to, let's say, the German Constitutional Court object. So it becomes very interesting at this point. I suspect next week nothing will happen on euro dollar until the ECB announcement. So the first 3 trading days for euro dollar can be quite quiet. This is my speculation, because everyone is looking at how Draghi is going to introduce subsequent QE measures. So that is what I believe the market is more interested. For UK, we have Carney making a speech, and Carney essentially says the banks are too big to fail. So what is he going to do with the British pound? Essentially, for England, there was no news. So it is also like, okay, England, no news. So why is British pound dropping? Well, it's because of some fractional disparity issue. So when it comes to the fundamental report, I'll let you know further. For US, we have a series of news. The theme again is inconsistent. We have got core durable goods orders fell 1.2% in April. The durable goods orders, on the other hand, rose 3.6%. Okay, so consumer confidence rose to 83 compared to a revised April number of 81.7. Then we have the GDP. GDP dropped 0.1%, and this is the worst even. More importantly, the market blamed that it is due to the winter condition. Okay, so if that's the case, the officials are coming out and say that, well, Q2 we expect a better number. So let's see whether this is true. And then initial jobs claim dropped 27,000 to 300,000 for the week commencing ended 24th May 2014. You can see that this initial jobs claim number has been fluctuating from 300 and from between 3 and 20, and it's just inconsistent. Reading was up to 0.4% in April. Okay, so all these are telling us one thing: inconsistent. Then finally, we have Canada. Canada, we have the monthly GDP number. What happened was that the GDP on a year-on-year basis rose 1.2% in quarter one, close to 2.213, not 2014. My apologies on that. That being the case, what is going to happen is next week we have got Canadian non-farm payroll. So the labor market will be in play. So expect some volatility movement, and let's see what's going to happen. So all in all, I just want to bring back the British pound issue. British pound dropped after after peaking out at almost 1.7. The reason is that there's a drop in the what we call the UK gilts yield. UK gilts is actually bond of UK government, so the yield dropped in the UK bond as well. And as a result, some people actually who have got a long position in pound dollar took advantage of liquidating their profits. So as a result, this week. Okay, so I'll have put up all the fundamental news. So go and read out and see if there are any questions. Come back to me. Next week, very interesting. Finally, because of the Memorial Day holiday, this week market has only 4 trading days in essence, but the market has been so quiet for the whole week. Next week, a lot of things was going to happen. We have got in Australia the building approval, interest rate announcement, trade balance, we have job market, we have got RBA monetary policy statement. So Australia, big news. We got the regional manufacturing PMI, noticing that the hang on, what did I do? I think I make a mistake. So let me just, I think I make a mistake in the sense that I pull out the wrong information. So let me just do a rectification here so that I can bring back the calendar of next week. I don't know why I pull out the wrong calendar. Sorry about that. This is probably the first time. Okay, I've not made such mistake before. But next week, June, let me see. Next week is also already wow. The reason why I spotted it out is the fact that PMI for China. So that was supposed to be. So when I just look at the report again, wow, something is not right. Anyway, so let me restart the phrase by saying that next week we have China. China, we have manufacturing PMI, and then we have got some new red flag event called the ISM. Not ISM, sorry, China. This is called services PMI. So somehow services PMI, and then going down to the list, nothing on China. So China, the official PMI. For Australia, we have got the building approval, the interest rate announcement, we have got the G quarterly. Wow, next week very interesting for Australia. We have then got the trade balance, okay, and finally, that's all for Australia. For New Zealand, things in New Zealand, nothing for New Zealand is. What we have got is in Europe. We have got the German preliminary inflation rate number, and then we have the Eurozone flash estimate, CPI flash estimate, and of course Thursday we have got the ECB Draghi's press conference. Then on for the UK we have got the manufacturing PMI, UK manufacturing construction, the services PMI, so all three PMIs are going to come. I have the BOE interest rate announcement, which should be a non-event, so the UK. For US, we have got the ISM manufacturing PMI. Okay, that will be ISM services PMI. That will be on Wednesday. Before that, the ADP payroll. Thursday, obviously, will be the IJC, okay, the initial jobless claim, and then non-farm payroll. Okay, non-farm payroll. So finally, for Canada, we have got all together interest rate announcement for Bank of Canada. That will happen on 4th of June. And then we have got the Canadian non-farm payroll, okay, on Friday evening. Before that, we have got the IV PMI. So at the PowerPoint slides, that will be updated, okay? So don't worry, I'll update this before I upload to the website. Now let's move back to the so you can see that only 4 crosses, okay? Only 4 100. We even have less than 100 for some. That is like very terrible. Okay, the market is quiet. Euro pips, can you imagine? 82 pips for euro dollar. Oh boy. Then in the currency chart matrix, seems to me that Aussie CAD are strong, British pounds are weak. Now, you notice fundamental wise, pound should be okay, should be an okay currency. New Zealand is talking about interest rate hike. But why is there a case that the technical is the opposite? Well, that is the reason why we say when the fundamentals and technical are not on technical analysis. Because our trade is always 1 week more, not more 1 week. So in that case, we do need to put our emphasis on technical analysis. So let's take a look at the COT report, see what the futures traders are saying. So that's the summary. Overall, what euro dollar more bearish, British pound more bullish, for all is less bullish, Kiwi is more bullish. CAD notice less bearish. So CAD is getting stronger a little bit. Then we have Swiss Japanese is more bearish. For gold and silver, less bullish. So that's the COT reports as of 27th of May. Okay, so these are all the open interests, so you can check out at your own time. Let me move on to the Nikkei 225, S&P 500, and US dollars index. Now for US dollars index, as I said last week, I expected US dollars to go strong. However, towards the middle of the week, there was some sort of like reversal. So what rectangle suggesting that, you know what, so let's see whether this support will be broken next week. If it happens, then perhaps the US majors might move up. So let's see. Then Nikkei 225 is still heading towards the resistance point, expecting dollar yen to go up, but dollar yen didn't really move this week. So I'm beginning wonder whether there's this association between Nikkei 225 and dollar yen. So I'm still monitoring the correlation. If I see something different, I'll let you guys know. Then for S&P 500, as you might tell, it has made an all-time high for the week. So the market is actually in risk on mode. Okay, but that being said, because seems that US news is very good, other than the fact that it is not consistent, overall it's still good. It's less troublesome compared to Europe's Eurozone. So what you can see now is that, well, if you have got a very strong US economy, a very strong US stock market, it does not mean US dollars is going to be strong. That is the difficulty I have when I first started trading the Forex market. So what you need to look at, number one, whether the euro dollar will really drop further, because if I suspect euro dollar to drop further, where do I move my money? My money has to go to US dollars, technically speaking. So let's see whether this holds true. I'm waiting for Drahi to give us the indication next week. So let's look at last week's swing trading ideas. We have got two trades, Kiwi short, the other one is the pound short. And unfortunately, Euro Kiwi, I was thinking of a very nice swing. Unfortunately, because of Fonterra's news, Kiwi actually was so weak that we were stopped out on Wednesday, the same day when we entered the position, so we lost 100 on this trade. And then for pound CAD, waiting for opportunity to short, but you know what? Only Friday's bar give us a bullish candle. The other 4 days all bearish candle, so there was no swing low opportunity. Well, that's trading. And then for CADs, we see the trade that we have tracked for like more than 4 weeks already is we are still hanging on to it. It has not been stopped out yet, so let's see whether there will be a turn. New swing trading idea for next week. Okay, so after careful consideration, this is what my game plan is. I still like pound CAD, knowing that pound is weak, CAD is strong. Technically speaking, there might be a swing high formation coming up. So let's see whether this will happen next week. I'm going to short pound CAD when we see a swing high formation. Aussie Kiwi cross, because Aussie strong, Kiwi weak. I'm waiting for a swing low formation on Aussie Kiwi cross. If it happens, we'll go long on this. Okay, so I keep it short and sweet. Watch on my options trading hangout, your global equity and futures market review. I will do it as soon as I can. So if you have any questions, let me know. I'll be happy to answer any questions you might have. So then let me show you my face once again. Thank you for watching this short video because I want to keep it as short as possible because I want to really upload this and so that you guys can see and plan for your trades in the next coming week. Okay, so let's hope that the market will give us lots of opportunity and for all of my subscribers, safe trading. Okay, this is Jack Wong. I'm signing up now. See you next week. Bye bye.